Very few emails to go through today. But might as well get into it. The first one just came in literally a couple of minutes ago, asking what this chart pattern looks like. And the question was, is this in a descending triangle? Not really. You know, what we're looking at here is, I've heard these things called trumpets. You know, you've got this fanning out of prices making lower lows, and you've got this ceiling on here. It's not something I see to trade or look for to trade. It's, you know, to me this is working backwards, and we should be looking at maybe this trend line here and seeing where price is getting squeezed into. So this is not something that I would advocate to monitor or attempt to trade. So not exactly sure what that is or why you would look at that. Anyway, that the question was sent, so that's my answer. The next one is looking at the same thing. Also, that came in this morning, looking at this as a particular range trade, and we've got obviously there's the top of the range here. There's some divergence which has been noted. We've got fib extension. This is going to be the tricky one. To get the extension on this, I think will be a little tricky. Where's the Aussie yen? You'd probably look at this, you know, this move here. If you went to this move, you're just going to be the same sort of extension. So I don't really like doing 2 bars, so I'll do 3 bars there. And we've got the 1.272, so it is kind of in the zone. If you've gone just these 2 bars, you know, the 1.618 is the level. It's a little tricky, and that's the difficulty with range trading, is finding or having that difficulty. You know, this is you could look at something like this and see if that is if the market's reacting to that, and it's not really. Although that was the high for that one. So I can't clearly see what you've done here on terms of your. It looks like you've measured this as your Fibonacci, and that's just coming back to where you started the starting point from, which is also your horizontal. Yes, there's divergence there. As I said, that getting the extension in there is possible, but it's a little tricky, and I'm glad you're only risking that amount on it, because I don't think it's all that strong. Literally, we have a high that's 5 pips higher than this high. It's not much, but it's 5 pips. And so we now have looking at a cycle above the EMA, and I'll be looking to sort of probably buy it down around here somewhere. However, the other thing you've got to consider is your risk reward. Is okay, you're risking 80 pips or so. You know, is this high here is only sort of 90 pips, which is that low there. If you're coming back down here, obviously that makes it a better risk reward. Yes, I've asked email about. Oh, sorry, I've asked Axie about NextGen. I've got that email as well. It's just an add-on that you can have that gives you some bells and whistles. It looks to be driven by MT4i, which is a website. If you go to mt4i.com, you'll see all the additions that they can have. What else would you take that looks like a triple top? How else would you take what looks like a triple top? Well, you need to have with the triple top, you've got obviously pullbacks, and that pullback needs to be around the same, and we don't have that. You know, this is a lower high, this is a lower low. If it had been the same low, something like the pound CAD, do I have the pound CAD here? No. If you look at something like the pound CAD, you know, that's not even that either. It's just going sideways, but I thought this was about the similar low. Yeah, you need, you know, the triple top looks like two M's joined together, and the Aussie yen just doesn't have that, I don't think. Okay, so that's those two. I think the trade will work for you, but as I said, I'm just not make money out of it. Just be careful how far it's going. So, fib clusters. The next email is, the pound Aussie seems to be in a range. You've got fibs all over the place. I presume these dots are where you're starting the fibs from. I'm not sure where that yellow one, oh okay, so that to that gives you yellow fibs. You can see that price is stuck in there. This to this gives you the red fibs, which is also a resistance. I can't see a purple one, but oh yeah, purple is also across here as well. Yeah, and then your extension. Yeah, not going anywhere fast. Which then brings me to your previous email. To that, your previous email was looking at this. Very similar currency pair, especially when the pound, sorry, the Aussie Kiwi, is not really going anywhere itself. It's Aussie Kiwi. I had to look at the weekly, and it's just going nowhere. So therefore, you'd think the pound Kiwi and the pound Aussie would be doing the same thing, just being driven, pushed around by whatever the pound's doing. So yes, you've got this, this two touches and a trend line. You have a reasonable horizontal there. This sets up and it looks okay. I'd be interested to see if you did the clusters or similar sort of arrangement on the pound Aussie as you did on the pound Kiwi, and see what you get. What you get back from that. But that looks, I'd certainly prefer to be long pound and short Kiwi than the other way around. So that looks all right. Whether you get to there, one would hope so. But yeah, it looks like a reasonable point of, you've got those highs, $2, range bound in between sort of $1.90 and $2. It's coming off that range and heading back towards it. Yeah, valid. I like it. You're in that trend line. So this is your weekly. You can see how important $2 is, and also what's that, $1.85, but even $1.90, how important that is. And that's a pretty strong trend line. Yeah. Getting it up to there, I think, would be good. Okay. You then sent me this correlations things, and in your email you say, I've been reading a bit about smoothing the equity curve, minimizing your drawdowns by the most efficient way is to trade from multiple baskets that are not correlated. I'd have to agree. So if you're, for example, if you're in the Aussie CAD, CAD yen and the Kiwi CAD are highly correlated. So I don't see much reason for going into a pair. Like if I was in the Euro yen, and I'd be hard pressed to be looking at the US or the dollar yen or the Swiss yen at the same time. I don't see the point. If you are going to do that, then it's just a matter of splitting your risk. So if you're you see both of these, the Swiss yen, Euro yen, which is pretty much the same trade as we know, you'd split it, say, doing 0.5% on each. But if you get, say, the Euro yen and something that's totally not like the pound Kiwi, that's not correlated at all, then that is spreading your risk, and I think that's a good thing to do. Would it limit your opportunities too much? No, not necessarily. Look, you'll get these setting up at different points. Some of the time they'll set up at the same time. It's just being aware of the high correlation. So if you do get like all of these ones, all the yen crosses, or this CAD yen, all these pairs setting up at the same time, you go, well, I'm not, you need to be aware of that and saying, well, this is putting all my eggs into one basket by taking all of these, rather than being patient and going, well, I'll just take one of them, and when something else sets up, I'll take that. But rather than going, oh shit, there's all these, there's 5 trades there. If I get 1% on them, there's 5% return. So I'd rather not think like that. I'd just put 1% on it, and rather than putting all your eggs in one basket, sort of thing. I hope that makes sense. But this is good to work out. I'm not sure where you got this from, but I presume you built it yourself using some sort of correlation website. And as I said, we know that Axie are introducing that through MT4I, so if you get the add-on, you'll be able to have that too. Cool. A gentleman asked me to show you guys this, which is how to get historical data in order to download quotes from the History Center. So for something like the that the Axie's only just recently introduced, like the Russian ruble or those Scandinavian ones, you can see you can grab the data from here. This is the website, Alpari, support /MetaTrader-4-historical data. So if you go to alpari.com and search for MetaTrader 4 under the support things, you'll find it. So that's download all the history for it. I think it does take some time, but that's a useful thing to see. I appreciate you sending that through, Phil. Thanks. And lastly, but not leastly, I got sent. Someone wanted to go long the euro on the phase 2, and has found a $1.35, which we know from Draghi is a tipping point. It's also where I bought it the other night on their news. So 35 is a hard level. Also, if you draw your Fibonacci from there to there, you've got the 2 being support as well, and there's some divergence here as well. So that all sets up. The issue might be, excuse me, is risk reward. So you're risking sort of 80, 90 pips, and your reward is only 100 and around 100. So it's about 1-to-1, which is not the ideal. It's not something I'd jump at. But there's certainly a potential trade there. You might, once it starts taking off, you might look at it on the shorter time frames. Get a cycle above here on the 4-hour or even the 1 hour. Get a cycle above it and trade on the shorter time frame. Because you know that it's happening. Your target is around sort of 36.70, somewhere around there. So 36.70 is up here somewhere. So now you've got a better risk reward ratio. If you get something like a 25 pip stop and targeting 100, that's a far better risk reward ratio than looking at it on the daily. And now it's established on the daily, and we have all the reasons for it, then we can look at doing that. You're still trading the phase 1 on the shorter time frame. So okay, so that's pretty much it for the day, guys. As I said, there's very few emails, and I was surprised by that because there's I was away last week. But dollar China, I did have a look at this. There is a ring low. Where you draw your fib from? Here, you got the 786. If you go all the way back down to there, it should be the 382. Excuse me. If you go back here, you've got nothing. So depending on where you put your fib, there's certainly support there. Okay. Horizontal. Yeah, you could say that's a reasonable horizontal, and it's back above that. RSI is coming off the lower end, it's converging. There is even a little bit of divergence here to get that swing in momentum. I'd be looking at this, having a target on this though. I don't know how, well, the Chinese would certainly love a weaker currency. It's about 2 times, but that double top I'd be a little concerned about. No, I didn't do the market report today. Did it yesterday. I'll do one again tomorrow, but not today. Possible ring low forming on the pound. Possible ring low, or you mean a ring high? I sold it last night at $1.70, just because I thought it's not going to go through there. Made about 30 pips on it. You mean a ring low on the hourly? Look, being long pound, I think is potentially a good thing, but the daily, this $1.70 is a pretty hard level, and if you look at the monthly and go back in time, you can see that 70.25 is even stronger. And don't know if it's got the legs, not when it's here. If RSI was down here somewhere, yeah, it could. There's a lot of press at the moment about Carney's raising rates to try and cool the market down, but they're still in there buying bonds all the time. So, I think they're trying to cool the housing market. I think taking this hourly here of this ring low is a low probability trade, with that resistance there when the daily's already overbought. Ring high, well, yeah, there is a ring high, but there's also no, there's no, what am I calling the thing of divergence. But yes, we have a lower low than the previous day, only by a slither, literally half a pip, but it's there. We need to see the divergence, which is not there, and it may not happen. You may not get the divergence. So it's just a matter of being patient. And the pound might pull back to this area, and RSI, yeah. So pound might get back to here. So this zone here, and bounce off that and have enough strength to get through. But if that is the case, I'll certainly be looking at taking it then. But at this stage, I'm not looking to short it on this daily time frame. I'll be just staying away from it for the moment. Okay. That's a quick one, 20 minutes. Anything else? Beware, we've got FOMC this week. FOMC is Thursday morning, 2 o'clock my time, so about 4 o'clock your time. So, and the Swiss National Bank that afternoon, that'll be the key driver of this week, and along with sort of Iraq and Russia, price action will be a little bit more bullish on the US dollar, I would have thought. But be aware of the FOMC and possibly stay out of those until after Thursday morning. Okay, guys, anything else? Okay, well, we've got one, we're on again tomorrow, and then on again on the 20th, which is Friday. So I'll chat to you tomorrow. You guys have a good one. Cheers.